Welcome to TradeTheMBI.com. This is John. This report is for the 4th. Well, we're looking straight at the intraday chart, and it pretty much describes everything from pre-market. Sell signal came in and literally just decayed most of the day. At the end, they finally brought it back up after too much put action, and then they could flip it back for call buyers. But destroying everyone from the beginning of the week that was in a long bias setup. Asian session was pretty much flat through that. European, of course, got excited, and then they faded it real quick because it's not a whole lot to get excited about. We look at it from a 50K standpoint. It was pretty straightforward. Uh, we had our dip below the red line right down here, so you know that you're going to get a revisit to that. It's just a matter of waiting for the signal. What we ended up with was you get that brief moment where you have the MBI white take over magenta, and that always leads to another bottom. But in this particular case, it came right as magenta flipped at the 23%, and that was a short cover rally. And that held up quite nicely until we got that crossover right here. And that's right when it began saying, uh-oh, short time. And sure enough, boom, things continued to fade all the way through until late in the day, and you can see. So it was basically from the 100 all the way down to the 23. Didn't go all the way to the 0, which because you ended up with MBI white that was much lower. So if you ended up with the MBI white spike up here and above the 25 range, and particularly above 33, you get a stronger move towards the 0. In this particular case, coming up here, you ended up with a very modest, didn't even make the 25 level. And in that case, you just usually you expect a 50% move at a minimum, and then if it carries through, it's usually just some extra bonus weight. And in this particular case, that lasted until you ended up with magenta crossing back over, which is right about here. These are the adjustments I'm working on with the paint bar, because that would flip that to green bias at that, particularly above the 23%. And so these little adjustments I'm making, and that's all going to be worked out on this paint bar configuration. A little early to be showing that one yet, but that'll be part of what is done for automation. As far as trading goes, that will make things a whole lot easier. And then even the conversion to having it open where it's on multi-chart so that everybody can use whatever brokerage they want. Then you have to deal with some of these issues that we've had with selectivity of only being on TradeStation. When you look at the crypto space, again, there's just no excitement. This is just a dead zone, and you can see it from the depth that we had there. Slight improvement from a shakeout, but you're still in negative, pretty deep here in the minus 19. We already had this. It was really even deeper there. We got into the minus almost 30 range, which was pretty extreme. And it just points out that there's just not that incentive to want to move back into a euro from that standpoint, and the really still back in commodities. Gold responding much better than silver at this particular stage. That rout in silver was pretty dramatic, and literally what you did was, they just changed the margin requirements, forced a lot of liquidations. That meant that the banks and that could get the physical assets, because again, you got to remember they're going to have that delivery for the end of March coming up for the March contract, and you've got to actually have the actual silver or gold to fulfill those contracts. So that's an interesting dynamic, because in the paper markets, there's always been that question underlying: would there be enough to meet the actual physical demand? And that's kind of what a lot of this was a play on, and see if that actually would make a difference. And much ado about nothing, because all they do is just change requirements for margin and that, force liquidations, and boom, then you've got everything you need, and you're getting at a discount. Because it was interesting, the paper market still selling at quite a huge discount to what the physical sale price in Shanghai or wherever. And, it became quite dramatic. I mean, you were, selling in the low mid 70s to what, the practical physical silver, then still in the 120 range. And, it's those kind of divergences that really matter, because people with enough force can literally create situations to force that kind of bulk sale. We saw the same thing with Bitcoin, where you had, this mass liquidation event several times now. Now in this dip, you can see that what we're getting is buyers with larger percentages of Bitcoin are the ones buying into the dip. So they're accumulating at a huge discount relative to where things were. I mean, it's at least a 30%, in some case, almost 40% from a Bitcoin view discount to where things were not that long ago. Excuse me. From a euro standpoint, it's an alternative, but I mean, to what advantage? None. It's the same thing with the yen, everything else. You're not even getting it now in crypto. The only thing you've got now is the commodity of uh, gold, silver. But my other view on that commodity story is oil. And when the others aren't working, that's where you move to oil. And the fact that it's been up at these levels, uh, pretty extreme. And again, this is still back on those tensions. So as long as Trump wants to play with the big stick game, the price you pay is energy. And you make markets uncertain. It didn't happen with Venezuela, but certainly an Iran threat is much larger, and it's had an impact. And does that help that rates are still where they're at? It's not that rates are wrong, it's just that you can't get the kind of economic push that he's looking for. And I think he's pretty much out of time when it comes to midterms, and that you needed to have things turning around a little bit earlier, and it didn't happen. And we talked about why. There was plenty of reasons, and he was set up in some of it. Part of it was just it takes time for some of these things to flip around. And after having that whole inflation setup, you just didn't have the free spending ability of the consumer. He's just, unless you're going to, which is why he talked about the dividend checks from the tariffs, and that because he needs to inject some kind of resources back into regular individuals who've been burned with this inflation disproportionately to people with a lot of resources. And that's the discrepancy, and that's what you're seeing play out. So this is why the whole term affordability is the big topic. It makes a lot of sense because you have to understand that. So, when we talk about this sideways action that we're seeing from there, and this is where I was pointing out that this 50K is going to be the relative, important target to focus on, and how it goes and the reaction from this mid time range. I mean, I guess you would call it the equivalent of a 60-minute or somewhere in between there time frame. Um, you really get a sense of how the market is, really responding to this, and it's literally just mean reversion back and forth because nobody has a real grip on, how soon or how long the time frame before some of these things start to build. Overall, you still got to be a net bias from a positive standpoint, which is why the market has held up quite well, because there's still that huge amount of investment. And that's just a question of, how long before the consumers are able to absorb that degree of inflation. And I still think it's another year or more out, but that can be speculated on. The market is just way ahead of where everyone else is, but that's what the whole point of futures is in the first place. You're always ahead of things, but they might be just a bit too far ahead, and that happens, and it will revert back. So that's why we continue to follow, what's happening from a geopolitical at this particular stage, because that's what's really moving the market. Earnings are pretty much kind of flattened out and not even doing that well, even despite the fact that prices held up as well as it has. So we'll continue to keep an eye on it, but it's going to start getting a little more interesting here as we get further into the heated cycle of things, and we'll see how it plays out. But we'll get it from the readings first. As always, anything relevant, I'll put in our team chat. Have a good one. Trade well.